Good evening, everyone. Welcome to this market update. The 4th of October 2023. It's been 7 months since my last update, and a lot has happened in terms of the longer term targets and things I was looking out for. Today we'll start on the 10-year yield. Now, the 10-year yield last update was in March, so we were sitting at about here. Where are we? March. Since then, we've rallied from 3.5% on the 10-year yield up to 4.836, and it's not over yet. If you look here on the monthly chart, you can see I had this line drawn in back at the time, 5.289%, and we're definitely on the way there. The last, since May, we have rallied quite a lot, and remember, rising yields means people are selling off bonds. And this is the 10-year US government bond. So people are offloading US debt. When that tends to happen, the market as a whole is not in a good shape. And we could see even higher yields. I'm expecting it to get into this 5.289, my long-term target back in March, and even higher. So looking for this to continue. Yes, we'll have pullbacks, but the overall bias is higher yields. The 30-year, much the same. Higher yields for the 30-year. And the 2-year, you can see we've reached into this target area that I had marked in. So bonds as a whole continue to sell off as yields go higher. If we go to TLT, we can see TLT now. We pull up the monthly chart. I was looking for it to come down and possibly respect this 88.14, but we've broken through that. We could make a brand new low here since the inception of TLT back in 2002. Because, as I said, the world economy is not in a good shape. This has been long overdue. The amount of debt in the world is ridiculous, and it's not sustainable. We have had a continued rise since 2009, 08-09, since the last GFC, over 10 years, and we have just risen and risen. Back when the virus happened, we had a sell-off, but that was just a small sell-off until the Reserve Bank stepped in and once again manipulated the markets, as they always do, as best they can. However, it's inevitable and they can't really control it forever. The market will have its way. Moving on to the Dow Jones. The Dow Jones, you can see we had this rally up from March right up here until we topped on the 1st of August. So if we pull up the drawing tool, we had the top back here in January 22. We've had 5 waves down to complete wave 1 of intermediate wave. Now we had a wave 2 pullback, and we're in wave 3 now, which is the most powerful wave of Elliott wave theory. So we're just getting started here. I would expect the midpoint of wave 3 is always the strongest. You could say terminal velocity. I'd expect this to continue going lower, and we could even have 1,000-point down days in the coming weeks and months into the end of the year and next year. Expecting this to break this low back on 13th of October and come down into 0.618, and the monthly here at 25,400 area and lower. The S&P, much the same. We topped here on the 27th of July, and like the Dow Jones, we've had 5 waves of intermediate wave 1, then a wave 2 pullback, stopping here. So we're now in wave 3, and wave 3 being the strongest. I'm looking for this to break the low here on 13th of October and get down into the 2000s. Nasdaq, much the same. Wave 1, wave 2 pullback, completed on the 19th of July. So looking for this to really start increasing now. Just a side note, in the S&P there's 500 companies in the NASDAQ 100, so 100 companies, as you can see here. The Dow Jones is made up of 30. There have been 7 companies pretty much keeping it afloat for the entirety of this year. And those are, let me bring up the tech sector. Those are Microsoft, Amazon, Apple, Google, Facebook, and Tesla. Those 7 companies have been keeping the S&P 500 afloat. So of 500 companies, you've had 7 running higher, and the other 493 are running flat to a loss. So that says a lot for the overall market. The market is fractured, and when you see the Dow, S&P and Nasdaq all not mirroring each other exactly, it's a deeper look at things to come. If we move on now to the Russell 2000, which is small cap stocks, this is leading the charge lower. And as you can see, we're almost breaking this floor here. And the same with the others. The Russell, I'm looking to get back into the thousands and even 3 digits in the coming weeks and months into next year. So, we are in for a big sell-off because, as I said, this bullishness has lasted since 2009 here. We went up until, what's that, 600% up into the top of November 21 when the Russell topped. And then the S&P, Dow and Nasdaq topped a couple of month or 2 after. So looking for the Russell to continue selling off, and once again this is in wave 3 as well. So looking for terminal velocity, which means that basically we're going to have big down days where everyone's rushing for the exits all at once. Now the long bond has sold off significantly, and that's the inverse to the yield. So this mirrors TLT pretty much. So lower long bond means bonds are getting sold off, and bonds have taken an absolute drubbing in the last couple of years, and I don't think it's over yet. Today on the futures, you can see we're trading up inside this channel for wave 2. Wave 2 completed. Now we're in wave 3, and we've broken. We came up, we retested the backside, and we're continuing lower. So we've opened the day lower as well. So quite often in the futures you'll see them at open red as the bearish momentum continues. Volatility is up for the day, and I expect volatility to surpass this of March 2020, possibly even that of 08, 09, up past 100 on the VIX, as wave 3 really starts to accelerate. Now, that's about it for now, guys. The dollar is also something worth mentioning. The dollar here has rallied significantly, looking for this to roll over for a pullback and then continue higher. And the inverse to that is the euro. The euro is sold off. So if the DXY pulls back, you'd expect the euro to rally. However, the overall trend, I'm expecting the dollar to continue higher, because in times of market selling, the best place to be is in cash, and everyone's looking to be in cash and wanting to be liquid. Gold sold off significantly the last week. Now, is that because people are selling to raise cash? Most probably. That's usually what happens. I'd expect this to continue lower, and And if we break through here, one step at a time, as I always say. But overall, once this pullback is complete, I'd expect gold to rally a lot higher, possibly even breaking these highs. Same with silver. They usually trend with each other. Anyway, guys, that's it from me for today. Just a quick update. As I've always said, be ready, be ahead of it. Don't wait till it's too late. Be in cash and just wait. Wait for the market to drop significantly and then buy things at bargain prices, just like you would a sale at a shop. 50% off, 60% off, 80% off, and then you wait and ride the next wave higher. That's how you build wealth. Anyway, that's all from me. Until next time, stay safe, be smart, and take care. Cheers.